Matthew Bodueje is my name. I lead an organization called Oasis Capital, one of the pioneers in private equity practice. I'm currently also chair of the Ghana Venture Capital and Private Equity Association that is seeking to promote and enhance the development of private equity practice in Ghana. The baseline report is important because it helps us to document what has transpired over the last 20 years. Starting off in 1992 with the first practice where at that time private equity or venture capital was regulated by the central bank. It took some industry members for negotiation discussions with the finance ministers of the time, the late Kojoba Redo and Co., and that led to the promulgation of the Venture Capital Trust Fund Act, which gave birth to some incentives that made our environment more attractive. We followed on with SEC passing some amendment to set private equity practice in regulatory framework. We've seen some changes done at various levels at the private pension scheme, and today we are happy to say that a number of private equity practices have been able to receive capital from pension funds. Not only that, most of us have learned that whenever you mention private equity and VC, everybody expects domiciliation to be in Mauritius or the Netherlands or in Cayman Islands and a few other places. But we are happy to tell you that Oasis has done 3 funds. All of them have been domiciled in Ghana. And not only that, but we have also been able to port and invest outside the jurisdiction of Ghana. Of course, for now, that is only practical in the ECOWAS region. If we want to go beyond the ECOWAS region, then I may have to also express Aliko Dangote's recent frustration, but I'm sure, as they say, Africa, we are working on it. So day by day, and at the same time, we also started with 6 million of local fund. Today, we have more than $200 million under management by local funds. Beyond that, other regional West Africa and Africa funds have also set up shops and operation and have full-time activity here, providing capital on sustainable basis for small and medium enterprise. We can also be proud to say there are quite a number of businesses that, in spite of the challenges that we've gone through, we have grown from very base levels. Some of them as low as 300,000 cedis revenue in somewhere 2010, and today some of them are over 20 million cedis. Some are over 120 million cedis. Some have proceeded to list on the stock market. We have also had some mixed stories, but all of them have culminated in the development of an asset class that is progressively becoming a net growth enabler and a net employer in our economy. So we are happy to discuss this and hope that we will continue the journey to ensure that private equity become one of the foremost asset class within our ecosystem. Thank you.
If you can take over, just again, a brief summary of who you are, and we also know you're the co-principal investigator and researcher of the report, but in your summation and answer, could you also explain the usefulness, the importance of this report for teaching, research for a local and international audience?
Okay. Thank you very much, and good morning to all gathered. Many thanks to my senior colleague, Steve, for giving me the opportunity to step into your big shoes. I see Julius also. Thank you very much. My name is Charles Adongo, and I currently lead the impact measurement and management team at Empirics, which is a local institution. And then I double up as a senior lecturer at the University of Cape Coast, the university of choice for that matter. We are the only university that you choose to go to. My background is data economics and development, and I was fortunate to serve as the co-lead investigator to this particular report. For me, as a researcher, it's been an extremely important journey in a number of ways, and so I would say thank you to Impact Investing Ghana and your team, largely because if you look at the trajectory of VCP research, by way of evidence, it's really been very limited in our parts of the world, and here I'm referring to Ghana and by extension, Africa. Mostly it's more of associations, i.e. AFCA, and among others, churning out some reports. And so when I was invited to be part of this, I saw it as an opportunity to co-create research questions that would not only be relevant to us as researchers, but to industry. And this culminates into the point of localization, because it is often the case that researchers set questions that are at variance with what industry expect. And so given that partnership between myself and Steve and the many other colleagues who worked on the report, it was an opportunity then to dig insights that would be both relevant to the two areas. And so thank you, Julius, also to the industry research collaborative that enabled this. But more importantly, the baseline provides that baseline insights largely for three reasons. One is to inform theory, second is to practice, and third is to policy. Theory is where the academics come in, because once you have that baseline information regarding what the dynamics are in terms of the industry, then we are able to move from the known to the unknown. To the unknown is now the research gaps that we have been able to point out based on this report that our colleagues within Ghana, Africa, and the world can continue to work on to support the development of the ecosystem. To the issue of practice is now the practitioners, i.e. the players within the ecosystem, having the needed insights to be able to guide their day-to-day practice and how to navigate the constraints and or hurdles that are holding the ecosystem back. Then to the policy issue, for me, that is the extremely important part, because again, we're able to point out certain critical issues that require policy attention, i.e. in the area of the SDGs, in the area of gender, where we realize, for example, that almost about 97% thereabout had no written gender policy when it comes to the issue of VCP investments. And so we'll get to talk more about it. So for me, on overall, it's been an exciting journey to be part of this baseline activity, and I know that we will continue to work as researchers or co-creators of knowledge to be able to drive knowledge products that will help in targeting, benchmarking, among many other things that we are all looking forward to. Thank you.
Thank you. Thank you so much, Charles. So we want to dive deeper. I'm going to kind of merge two questions, but you guys are the experts, so I know you can tackle it. So we are talking about deal flow and deal volume. I want in your response, Matthew, to maybe explain as a practitioner what is the deal flow and deal volume, and then also, as we can see from the graph, and these are all amazing images from the report. Could you also give an understanding to why the reasons behind the rise and the fall, as we can see from the graph? And we also understand that the report looks at 2 decades. And so, again, using some of your own experiences, let us understand some of the trajectories and the transaction reasons for the rise and fall in the VCPE sector.
Okay, thank you very much. The deal volumes are the number of cases of transactions that have occurred over the period. And the values are the quantum in terms of money that have also occurred over the same period. So there are occasions where the volume could be small, but if the transaction size are big, you can have a higher value, and vice versa. You could see from the graph that we've had occasional spikes, and that mimics the economy of Ghana, if you look at it quite critically. And all the time, and nowadays, if you tune into radio and others, you hear everything negative. I have a German friend who visited me quite recently, and he spent 10 days listening to the radio, and he says, what is Ghana doing to itself? So I made a mental note that I would like to call Bernard and say, can we have the month of June as a month in which from 7 a.m. to 10 a.m., all negative news will be halted or shelved. And for once, we will speak about positive things. Because in spite of that, if you still draw a graph, a linear graph, you would see that some positive and growth have been seen. That is a reality. We've done environment where we've done investment, for example, in a case where you invest 1.1 million, that was equivalent to 5 million cedis. 4.5 years on, you exit that investment and get 22.5 million cedis. In any country, not on Jupiter, but on Earth, that would have been a phenomenal return. However, when you convert that back into your dollar, then you come out to something in the region of 1.4 or 1.5 million dollars. It's still not a bad return, but what is it that we cannot do to help us stabilize our economy? So we've seen that if you check it critically, they follow a certain pattern, that the years where we have very dynamic macroeconomic features, we tend to get some challenges, because what we have to bear in mind is that capital is global, and global asset allocators watch where they will get good, sustainable return, and their money is safe. And there is fluidity in terms of ability to move in and out of their money. So as we build an economy where we are constantly challenged, and if you look at it, two key drivers, high interest rate and exchange rate, which fuels inflation. What is it that we cannot do to help solve these two problems? Because if we solve it, it will help us. Why? Because government will pay less on its debt. Its debt to GDP growth will be minimal, because debt will not be accelerating at that rate, right? And we will progress and also protect the value of investment that you make. I give you one anecdote, that in 2007, we employed a fresh graduate whose salary was equivalent, fair salary was equivalent to $1,500 in city term. When I finished university in 1998, my fair salary was equivalent to $325. So I went on to say that Ghana, I think we are there. The stage in which we are, even if you appoint anybody to lead this country, we will only accelerate. We won't come back. I think today I know better. Right. So I wouldn't make, and of course I was young then, so I could make those kind of statements. Today I'll be careful in making that futuristic statement. So David, I agree with you, but we will have another debate on that. Right. So clearly that spikes have really affected the industry. But that said, we still have seen significant growth in terms of the number of fund managers, in terms of number of funds that have been set up, in terms of institutions that have benefited from financing, in terms of employment that have been generated and sustained. At the end of the day, we would say that Ghana today is better than Ghana 20 years ago. There is no question about that. And we can only hope for a better future. Thank you.
We can only go up. Charles, is
Yes,
it possible for me to give you the SDG question? Because
no,
I'm already being prompted here. So in regards to the SDGs, we understand, and we have Charles Abani here as well, in regards to the UN. In about 6 years' time, that's the end of, as they say, the end of the SDGs. And that's 2030. And we want to understand that within this ecosystem of investment, how, let me say, evident is it that we are utilizing or deploying the SDG matrix in the VEPE transactions?
Okay.
Oh, sorry, VEP, venture, VCP, so
Mm-hmm.
VC, venture capital, private equity. I apologize if I'm just...
No worries. Yeah, so thank you. So we're talking about an important matter that is of global interest, and we are referring to the SDGs. And so as part of this activity was to find out if we are able to dig evidence, because evidence definitely is the loudest voice, as we have it at Empirics. And so we try to find out how aligned, either in contribution or attribution, the investments are to the SDGs. And here I'm referring to the volume of deals and then the value of deals. But more specifically, what you have projected are the value of deals, disaggregated in terms of venture capital and private equity, and then also we have the overall picture. So aside from that, looking into the data, we had conversations with the ecosystem players to gauge from their mindset how they aligned to the SDGs. And generally, we had that strong communication from players that they are strongly aligned to the SDGs. And two major SDGs stood out, and somewhat the last one is given, and that is no poverty, or if you like it, alleviation of poverty and partnerships for goals. Generally, we realized that from all the deals that we had tracked are strongly aligned to these two major deals. With no poverty, the investments or transactions were either taking people out of poverty or sustaining them from moving back into the poverty line in terms of deprivations. And in that regard, you realize that we had significant investments, either in terms of VC, PE, going into that. And for the partnership for goals, as we know already, before a transaction would take place, I recall one of our senior colleagues gave a scenario of the value chain that you have to go through before the money finally reaches the portfolio company. And definitely that is why we are saying the partnership for goals, naturally falls in within the ecosystem. But permit me then to comment on the other areas we realized that the progress towards these goals are really something that we need to take a look at. Principally is the issue of life below water. And my university currently has a center we call the Center for Blue Economy, where we currently having some significant attention with the help of the World Bank that we're looking at that. But we realized that out of all the investments, about 116 deals from 1992 all through to the period that we looked at. Oh, sorry, permit me, that is the period of the study. But from 2009 to 2023, subsystems that will help in tracking and helping them understand, for example, the SDG impact standards that are out there that can help them to incorporate that into their day-to-day practice. I am sure that we are very poised to moving forward in that direction. But more particularly, we need to pay attention to the SDG on climate action. If the issue of net zero, as Charles Abani talked about earlier, is anything to go by, then we need to begin to look at that more closely and more intentionally. So intentionality was missing in terms of
Charles,
our commitments to the
if you
SDGs.
can, before you let us, because we have two more questions, can you just quickly summarize the inclusivity in regards to, I know, right, it's coming closer. How inclusive is the PEVC transactions? If you can summarize that, then I'll give Matthew about the exits.
Okay. So when we're looking at the issue of inclusivity, the issue of diversity, it's about the richness of the diverse people, i.e. in terms of gender, in terms of age, in terms of ethnic backgrounds, among other key indicators when you're looking at this issue. For the purposes of this current discussion, I would want to focus on the issue of gender in terms of the mix as well as age cohorts. Now I feel very intimidated in terms of how this has been done. Yeah, but nonetheless, I would say that loosely we saw commitment on the part of the ecosystem players to being very inclusive. But more intentionally, we will say that there was that lack of intentionality. Again, emphasis and decisively on the word intentionality. Policies were missing when it comes to gender-related issues, when it comes to our commitment to climate action. And by that, I'm referring to the fact that youth today have a place within the discussion table. But we realize that we realize that young people, and I'm referring to the youth, were largely missing when it comes to the workforce within the VCP industry. But it's also understandable because this is a field that requires a certain level of experience and a certain level of exposure to be able to deal with that. And so in that regard, we will need some support actions as to how best we can actually bring our youth into the space. But permit me to indicate that if you look at the gender dynamics, the situation of Ghana is an exciting one. An exciting one, as already indicated, because from the evidence, we realize that largely 4 out of every 10 senior members in terms of the data, or if you like it, about 40% of the composition of senior members were actually women. And that is worth celebrating because if you contrast that to the Africa situation in terms of the average, we're just looking at 1 out of 5. And then in terms of the matured markets and/or jurisdictions, permit me to use the United Kingdom, you realize that the situation is just about 20%. And so I will pause here and then allow the timekeeper.
Yes. So as we conclude, the last question is on exits, and we're going to exit the stage with this question. And I'm going to give that to Matthew. So what are the issues that are holding the VCPE sector in the ecosystem from, becoming the desirable amount? I know we heard so many things, and I thought you can use your examples because you have a lot of exits, well, some exits, I will say, and talk about exits as you discuss this.
Thank you very much. Exit remains existential risk for private equity practice on the continent Africa, so not only limited to Ghana, but there has also been some recorded exits, and as we grow and evolve, we're also devising methodology that allow us to exit seamlessly because there are several mechanisms for exiting. Today, we're seeing several layers and tiering, as David alluded to earlier, where some private equity practice make investment, it becomes a pipeline for another categorization, and that journey continues up to a point where it becomes a classical private equity practice where leverage financing could be used as a tail end of that. But of course, that is a function of the levels of interest rate. Because if interest rates were low, quite a number of private equity deals could have been easily done and also enhance returns. As a result, we have to adapt to the environment in which we operate, and you will begin to see a number of exotic structures that are being used within the environment to ensure that transactions are able to exit smoothly. Indeed, we have had quite a number of exits. We still are struggling with some of them to exit. That said, we would say that on average, the exit potentials are much better given the structures that we have used. One of the critical factors is our economy, which is not reliable and sustainable in terms of growth. Few years ago, everybody was trooping to Ghana to say that Ghana is the gateway to Africa. Ghana is an investment destination. But today, if you read our numbers, it tells a different story. As a result, we need to look more inward to see. And I was happy to learn that little by little, we have pension fund asset class reaching going past 11 billion. That is quite interesting. And I also learned something quite interesting, that if you look at it in aggregate, almost 65% could be put to the private sector. What it is that we need to build capacity and strength, because the success and growth of the business is a function of ability to exit. Because if you have a good business, it is not too difficult to sell. That means we only have a lot more work to do, and that would enhance the exit potential. On that note,
yes,
we would like to exit.
We would like
before
to exit.
we are
Thank
exited.
you so much.